Hi, my name is Aziz, a fellow of the Association of Chartered Certified Accountants, ACCA. Welcome to part 5A of the course Bookkeeping up to Final Accounts. Today's topics are processing monthly finance lease payments, processing additional loan taken by the director and secured on his property, and processing stock purchases, purchase of stocks and consumables. Now, let me start by explaining that the system that I've set up here, I have set it up on the assumption that we are dealing with an integrated system. But the reality is, it's just a simple spreadsheet system which I've set up for the purpose of explaining to you how things work in an integrated environment. What I mean by an integrated environment is that an environment that has a finance system where all the modules communicate together. An integrated system has different modules. You have the purchase ledger, you have the sales ledger module, you have the fixed asset register, and then you also have the stock module. Now, in an integrated system, all the modules communicate together on a real-time basis. What that implies is that when you put a transaction in one module, this transaction replicates itself in all the other modules. On the in all the other modules, so that you don't have to spend a lot of time doing repetitive data entry. Now, in an integrated system, you have two different kinds of users. You have an end user and a super user. The super user is the one who has access to all the modules: the purchase ledger, sales ledger, stock ledger, and so on, and then the nominal ledger. Okay, those are the modules: purchase ledger, sales ledger, nominal ledger, fixed assets, stock ledger, and so on. Now, the super user will have access to all those modules. He can go into any of them, change things, amend things, and so on. The end users are the junior account staff or other people in the finance department. It is the super user who grants access to each end user depending on their authorization level. He can give them password, he can withdraw their password, he can change their password, etc. But here, I'm going to assume that I am the super user, so I have access to everything. I'm going to do everything. I'm going to be moving from the nominal ledger to the purchase ledger to the sales ledger and so on. And you probably notice that from time to time, I check the journal to make sure it has balanced. Now, you don't have to do that in an integrated system, but because this is a simple system which I've set up for the purpose of illustration, so I have to keep checking my trial balance. So, because wherever the rule of double entry bookkeeping has been obeyed, the trial balance must always balance. So let's get started. I am going to start with the lease payment. It will be recalled that the company was set up on the 1st of April 2019, but at that time, the company did not. This lease payment commenced. This lease agreement commenced on the 1st of April 2019. At that time, the company had not started trading and has not started generating any income of its own. But payment must be made to the lessor, that is the owner of the property. In this case, Billington Local Authority. So the director had to pay the money out of his own pocket, out of his own personal pocket. So what we are now going to do with the accounting treatment is that the total payment, which is a whole year payment, will be split into capital and interest element. The capital element will be debited to the finance lease obligation account to reduce what is owed. The interest element will be debited to the interest expense account because that will not reduce what is owed. And then the total, that is capital and interest element, will be credited to loan from the director's account to increase what the company owes the director, because an additional loan from the director. So let's do that. Now, I have prepared the journal entry for that, and it's journal number 6. Like I always say, before you post your journal entry, please always do a draft of that journal entry. Don't just prepare a journal and don't just go and post your journal into the nominal ledger without doing a draft and then ensuring that your journal is fine and that your nominal ledger will not be messed up. So I've done the draft, and as far as I'm concerned, the journal is okay. It's ready to be posted. So, and I will approve it myself, okay, because I'm the super user, I'm the one in charge. Ideally, when this one is done by somebody else, like an end user, like a finance assistant or a bookkeeper, it will be brought to the finance manager to approve. So I'm going to assume that all those things have taken place, and I'm now going to post the journal. So we are going to debit account 25120, which is the finance lease obligation account with the capital element. So 2521. So that takes me to the nominal ledger. So nominal ledger, I'm going to look for account 2521. So the transaction took place on the 1st of April 2020. 2020, yes, that's when the business actually commenced. So the capital element, that's the description, capital element of finance lease for 1st of May, covering 1st of May 2019 to 1st of April 2020. And the journal reference number is journal 6, JNL 6. JNL 6. And the amount paid is the capital, that capital element is 7786.75. Okay? Now, the other side of it is the next item on the journal list is the interest element, which will go to interest expense account, which is 6270. So I'm going to look for that in the nominal ledger and post it. Okay, 6270. Okay, again, 1st of April 2020 is the name, is the date that I'm going to put there, 20, and the description again must match what is on the journal. Yeah, so, and again, it is JNL 6, and the amount to be debited is 4928.88. That's for a whole 12 months. Right. Okay. If we check our trial balance now, you will see that it's now out of balance by £12,000, £715 and £12,715 and 63 pence, because we have not taken care of the credit side of the transaction, and that credit side is to now increase what is owed to the director. That is credit the director's loan account. Okay, that loan from the director's account. And what is the code for that, which I've already put on the code is 2501. 2501. Okay, so 2501 in the nominal ledger, 2501. Right. And the date again is 1st of April 2020. First of April 2020, and what is the description that I need to give it? Yeah. And the journal number is JNL 6, and the total amount to reduce what is owed to the director, and to increase it, is £12,715. If we now go to a trial balance, it has balanced. Like I said before, the treatment is, first of all, split the total payment into interest and capital element. Debit the capital element to the finance lease obligation account to reduce what is owed. Debit the interest element to interest expense account because it's just a business expense. It doesn't reduce what is owed. The total payment, that is interest and capital, credited to loan from the director's account. If the money had come out of the company's pocket, the credit element would have gone to that total credit would have gone to the cash book. But in this case, the director paid it for the company, so it's a loan from the company from the director to the company. So the second item I'm going to now deal with is the loan that the director took again. The director took out a personal loan. He took a loan just to ease cash flow pressure on the company at the start of the business. Most businesses go through the same phase, through this phase. When the business has just started, you are not likely to be making money on your day one of starting business. But meanwhile, costs will be incurred, like, you have to buy things that will be used in the company, you have to pay bills, but your money has not started coming in. And you don't want to start your business with a bank overdraft. Bank manager will not allow that anyway, unless you've already agreed to something with them, So it took out this loan, a personal loan, secured on its own personal property, and then we are now going to do the double entry. The double entry is to debit the cash book, because first of all, the loan went into his own personal bank account, and then he transferred it from his personal bank account into the company's bank account. So we are now going to debit the cash book with the loan amount and credit loan from the director's account, because this is an additional loan from the director to the company. So let's deal with that one also. Now, in an integrated system, you shouldn't have to do this with a journal entry. I am now going to post the loan into the cash book, that cash into the cash book, the current account. Okay, this is the current account. It did this again, 01/04/2020. That's when he transferred the money from his own personal bank account. Bank transfer. Joe Blocks. So the reference number probably backs or something like that. Joe Blocks. So £15,000 debited to the cash book. Now go and look at our trial balance. We are not out of balance by £15,000, but because we haven't credited that amount to the director, loan from the director's account. It was an additional loan from the director. So loan from the director's account, £15,000, 01/04. Right, bank transfer. Joe Blocks. So it's £15,000. So if we look at the trial balance again, the trial balance has balanced because we have done both sides of the entry. Now, just again, let me just quickly repeat again. The loan that the director took from his bank account, the personal loan that the director took and lent to the company, was moved from his own personal bank account first and then transferred into the company's bank account for use in the business. What we have done is we have debited the cash book, the company's cash book, and credited loan from the director's account. So that settles that. The next item I'm now going to talk about is purchase of stock and consumables. Now, when you buy items for use in the business, in your business, like things that are going to consume straight away, use in the business straight away, they are not, like raw materials. So the double entry should be, you have to credit the supplier's account in the purchase ledger with the total amount inclusive of VAT. Okay? Debit the expense account in the nominal ledger with the net amount exclusive of VAT, that the amount in the net amount exclusive of VAT. Right? The VAT element, that is the VAT that you have been charged by your supplier, should be debited to the VAT recoverable account. Now, that leaves you one element, the credit, that leaves you one, the other side of the double entry, which is the credit side. Debit the entire amount, that is the net and VAT, to trade creditors control account in the nominal ledger. Like I said before, the purchase ledger and the nominal ledger are linked. They are linked through the control account. The control account code is the only link between the purchase ledger and the nominal ledger. The balance on the purchase ledger and the trade creditors control account must agree, because the two systems communicate on a real-time basis in an integrated system. So I will demonstrate that in a minute. Now, let me just put this invoice through, okay? And then you will see what I mean. Now, when the business started, goods were ordered for use in the business. An internal requisition form was completed because the goods were going to be used, although those items were going to be used by all the departments, not by any particular manager. So each manager asked for what they needed, and look at them: spanners, screwdrivers, lubricant, brake oil, engine oil. Look at the quantity: 40 sets of spanners, 40 sets of screwdrivers, 100 bottles of lubricant, 10 hammers, and so on and so forth. This is the day they are needed. They are needed by the 2nd of April. But that does not mean that the supplier will bring them, we supply them on that same day anyway. Now, but that is the date that they are expected to be delivered. Now, to compile this, to complete this internal order, internal requisition form, they've checked their store that these goods are not already, they were not already there. So they completed their internal requisition form. The internal requisition form was completed by Mr. Joe Blocks himself. He asked his manager to, all the managers, departmental heads, to let him know what they needed. And they told him. But because this is not needed by just one, the items are not needed by just one department alone. So the responsibility for placing for making the requisition was not put on any particular manager. He asked them to let him know what they needed, and they told him, and he completed this himself. So a purchase order was then raised, and this is the purchase order. He raised his purchase order, but before reaching the purchase order, he went through a price list. This is the price list. This is the price list. As you can see, a price list was compiled when the company established its relationship with its potential suppliers. Right. Each supplier was asked to give the company roughly how much they will sell the items to the company. And with what the suppliers told the company, this list was compiled. Now, it is this list that will be used when placing orders with each of the suppliers. So with this list, a purchase order was completed. Okay. For instance, spanners will be expected to be sold to the company at £20 per the price list. Screwdrivers will be expected to be sold to the company as £10 because that is what the price list says. Hammers will be expected to be sold at £10 each. That's what the price list says. The quantity requested is £40 per the internal requisition order for spanners. For screwdrivers, the quantity is 40, and for hammers, the quantity is 10. Now, later on, these goods were delivered, internal goods requisition note was completed, and an invoice followed from the supplier. Now, before placing an order, let me just say, before you place an order, you have to check your credit limit with the supplier. First of all, check the supplier's account in your purchase ledger. Go into your purchase ledger, look at the supplier's account. What is your credit limit? The credit limit is £10,000. That's fine. What is the value of the purchase order? The value of the purchase order must be below the credit limit. But then, what is the balance on what do you already owe the supplier? The outstanding balance. If the outstanding balance plus the value of your new order will take you above the credit limit, don't send the order, because if you do, you run the risk of your order being turned down. Find a way to bring your balance to somewhere below the credit limit before you place your order. Otherwise, your order will be turned down. But if you are well within your credit limit, then go ahead and place the order, which is what we are going to do because we are well within our credit limit here. So, and the credit limit is £10,000, zero balance on the supplier's account. Value of the total value of the order, including VAT, is £1,560. So we are okay. So we place the order. Goods were delivered, they were checked to be okay, then an invoice followed from the supplier. So this is the supplier's invoice. When the supplier's invoice was received, first of all, we ensure that the invoice number quoted, the invoice number quoted on the supplier's account is the same as what we have in the supplier's account in the purchase ledger. Okay? They are the same. That is the invoice, the VAT registration number. They are the same. Now, the next thing we want to do is to look at the items supplied. Are they the same as what we put on our purchase order? 40 items for spanners. Where is the purchase order? Right, it is a purchase order. 40 items for spanners, 40 items for screwdrivers, 10 items for hammers. Now, what about the prices? Are they the same as what we have on the purchase order? Yes, they are the same. I've checked. They are the same. £20 per set, £10 per set, and £10 each. Now, having satisfied ourselves, the next thing we want to do is to make sure that the supplier has quoted our purchase order reference number on their invoice. Because if that is not the case, this invoice will become invalid and will be returned to the supplier. The supplier will then be asked to quote the purchase order reference number. Okay? Now, having satisfied ourselves that everything is fine, the next thing we want to do is to look at the supplier says, pay. Please make your check payable into this company or pay into this account number. The bank account number must agree with what we have on the master record. Okay, I've checked it, and they agree. This is the bank account number, bank name, EU Bank PLC, bank account number, sort code. They are the same. Then it's okay. We can post this invoice. Now, another thing is this invoice. Have we coded them? They need to be coded. What I mean by coding is describe what the transactions are. Where do we go in the nominal ledger? We giving each item code number 6070 in the nominal ledger. 6070, what do they mean? 6070. If you check the chart of account, 6070, they come under small tools. They are small tools. So it's okay. Everything is fine with this invoice. It can be posted. So the next thing we do is go to the supplier's account in the purchase ledger and post the invoices. And the invoice, sorry. So what is the invoice date? Greatest. Right, okay. The invoice date is 6th of April 2020. 6th of April 2020. 06/04/2020. Right. So invoice. Yeah, purchase of small tools. Small tools. Nominal ledger code 6070. Invoice number 33. What is the invoice reference number? Invoice reference number is 33. Invoice 33. And the total amount, inclusive of VAT, the total amount, because we have to pay all the amount to the supplier. The total amount inclusive of VAT is 1560. It's 1560. £1,560. Yeah? As you can see, the trial balance still remains the same because the purchase ledger, that is a subsidiary ledger. But I'm now going to, again, link it to the nominal ledger, you see. So the next thing I'm going to do is look at the expense code. The expense code for that amount is this. Yeah, small tools, 6070. I am now going to 6070 in the nominal ledger. Code 6070. Yeah, invoice date. (0604) 2020, purchase of small tools. small tools, invoice 33. Now, in the expense code, I'm only going to put the net amount exclusive of VAT because the VAT is reclaimable. So the net amount is £1,300, £1,300. Now the VAT element is 260, if I'm not mistaken. It's 260. 260. So that will go into the input VAT control account, or the VAT reclaimable account rather. So the VAT reclaimable account, that's where that will go to. Yeah, VAT on purchases, which is reclaimable. So the date is 0604 2020, purchase of small tools. Okay, invoice 33. Okay, invoice 33. The VAT elements is £260. 260 pounds. 260. Right. Okay, let's check our trial balance. ETB. Let's check our trial balance. The trial balance is now out of balance by 1560 because we now need to credit the purchase ledger control account, which is the link between the purchase ledger and the nominal ledger. So 2000. Let's go 2000. Okay, and again 0604 2020. Yeah, purchase of small tools. Yeah, say the greatest company. Yeah, invoice 33. So the total amount inclusive of VAT is what we owe, and that is 1260. £1,260. And the trial balance, oops, we are out of balance now. So let me see why. Oh, it's 1560, not 1260. I got that one wrong. It's 1560, not 1260. That's why we're out of balance. It's 1560. So 1560 is the total amount inclusive of VAT, which is the liability here. So the trial balance has balanced. So, like I said before, when you receive an invoice from a vatable supplier, and you are also vatable yourself, you are VAT registered, and you can reclaim your VAT. What you do with the invoices, you credit the supplier's account in the purchase ledger with the total amount, because you have to pay everything to the supplier, including the VAT. You debit the expense account in nominal ledger with the net amount, that is in this case, small tools expense account. You debit a purchase of small tools. You debit that with the net amount. The VAT that is reclaimable, which is your current asset, you debit that to the VAT reclaimable account. Now, the total amount that is including VAT should now be credited to trade creditors control account. If you do that, then your nominal ledger, that is the trade creditors control account, which is what we have here, will reflect a balance of 2,000. A balance which it will reflect a balance that agrees with your purchase ledger balance. And the purchase ledger balance here now is 1560. That is the total amount that you owe all your suppliers. Every supplier on your sales ledger, the balance of the account added together comes to 1560, and that is what your sales ledger, creditors control account in nominal ledger has reflected. They must always agree, because I have linked the system and they are communicating. Okay, that is the assumption in an integrated environment. It's a very valid assumption. So we are okay. The trial balance has balanced. So if I can just put a couple of invoices through again, just to demonstrate. So the next item I'm going to now process is, now I'm going to post a couple of other invoices just to demonstrate. So I'm going to just 1 second. Right, okay. Now purchase invoice, PO2. There we go. Now, what has happened here is the same thing that I've described earlier on. Purchase order. Yeah, PO2. That's right. Now, based on the requisition note that we completed earlier on, we placed another order, a purchase order with another company that's called Ade Limited. Ade Limited was asked to supply 100 bottles of lubricant at £10 each. Again, we check that against our price list is fine, so we place the order. The price must not differ. The price on the supplier's invoice must not be different from this. If it is, then there's a problem. We contact the supplier straight away. Now, this is the invoice that came from the supplier. Again, yeah, as you can see, Ade Limited, 100 bottles as ordered. Okay, delivered. Now, we have coded it. I have to make sure that everything is fine. The VAT registration number has been checked, is correct. So we're giving a nominal ledger code of 6060. 6060. Now, nominal ledger code 6060, where does that belong? What is the description? 6060. So let me go and check the chart of account. Yeah, purchase of paint and shop materials. Paint and shop materials. Okay, we call it that. So we are now going to post that invoice because we are happy with everything there. Now, we look for the account of Ade Limited in the purchase ledger and we put the invoice there. Okay, Ade. Okay, and what is the date of the invoice? The date of the invoice is 04/04/2020. 04/04/2020. Purchase of lubricant. Yeah, 100 bottles of lubricant at £10 each, as stated on the invoice. No. Okay. Right. Nominal ledger code 6060. Invoice number, reference number. Not this one. Yes. Invoice reference number 10. Invoice reference number 10. IMV 10. Now, the total amount is what we are going to put here. That is the amount inclusive of VAT. The VAT element is just £200, but you are going to put the total amount inclusive of VAT because that's what we have to pay to the supplier. £1,200. Yes. On the credit side, £1,200. Okay. Now, having done that, you will see that the balance on the supplier's account is now 2760. Now, to make it agree with nominal ledger control account, so we now need to go and do the expense side as well. 6060. First of all, 6060. That is the expense side. Purchase of paint and shop materials. Okay. 04/04/2020. 2020. Purchase of paint and shop materials. Yeah, invoice number 10. Now, the VAT exclusive account amount is £1,000. £1,000. Okay. VAT. The VAT element, which is reclaimable, is just £200. 04/04/2020. Yeah, purchase of paint and shop materials. Okay, invoice 10. and the VAT amount is £200. Right, okay. Now, what does our ETB say? It says we are out of balance by £1,200 because we have not credited the control account. So that's 20, the control account, trade creditors control account. Okay, 04 2020 purchase of paint and materials are delimited. Invoice 33, invoice 10, and it's the total amount £1,200. So what has now happened is our ETB, our trial balance has balanced. Now our trial balance has balanced, so we are okay. Our double entry is fine. 1270 is what is there in the purchase ledger. What does the other one say? The other one says 1270. So the creditors control account has balanced. So so I will stop here today, and please thank you. Don't forget to like and share and subscribe. Please click the subscribe button to get my next video. And thank you very much for your time, and take care. See you soon. Bye.